Okay, welcome everybody. We're delighted to have you join us today for the second in a four-part series sponsored by Bank of America. And it is part of a partnership of thought leadership that we are building at the Nonprofit Institute with the Bank of America to support and strengthen nonprofit leaders and organizations across the San Diego region. And we are doing this with Bank of America grantees, community partners, associates at Bank of America, and clients. And we're really excited to have this opportunity to have you hear from Rick today, Rick Dalside, that will be talking about, you'll hear more about it after Dana gives the introduction. One of the things that we did want to highlight is we know that all of you are going through very challenging times right now with this ongoing unfolding crisis that has many different fronts. And so this series is really in response to the things that you've told us about what you need to help you adapt your personal and professional work as we adapt to this new reality in the current time. And so with that, I'd like to turn it over to my wonderful colleague at Bank of America, Dana Alligood.
Awesome. Thank you, Emily. Thank you for having us. Thrilled for the partnership. Good afternoon, everyone. As Emily said, my name is Dana Alligood, and I'm Senior Vice President and Global Commercial Banking Market Executive for Healthcare, Education, and Not-for-Profit for the West for Bank of America. And so my team is responsible for helping our clients, and many of you in the audience are some of our clients, and helping you have and make financial lives better. Specifically, we bank not-for-profit hospital systems, private universities, and social services organizations. And while we provide traditional banking services like loans and cash management, we also know firsthand, as Emily said, some of the challenges 2020 and the pandemic have dealt nonprofits this year with regards to closures, revenue impact, reduced capacity, furloughs, CARES Act funding, reduced staff, fundraising challenges, and operating model changes. And so not only am I a banker, but I also work and volunteer in the community and serve on 2 boards in San Diego. So I also have personal experience as board chair and a board member of these challenges and decisions that have to be made. So this is why I personally think this webinar is so important. It's critical that we all learn to adapt in this environment and make decisions quickly to make it through. So I'm really pleased and honored to be part of this conversation today. And as a company, Bank of America, we are committed to the success of our communities. Just recently, our CEO announced a $1 billion investment to ensure just that. As part of the $1 billion, we will invest $200 million in minority enterprises, businesses, and funds. The plan is in the works, and we look forward to sharing more with you as plans evolve. Bank of America is truly committed to providing businesses and nonprofits with support and tools they need to be successful, which is why we bring you experts like Rick today. We believe in the power of knowledge and sharing resources needed to maximize revenue, minimize expenses, and optimize processes. And with that, I want to introduce you to Rick Dalside, who is a certified public accountant with a master's degree in taxation. Rick is a financial expert by trade. His lead servant perspective and warm personality give him an advantage in perfecting corporate vision and ensuring organizational efficiencies. As a member of the executive management team and a CFO for PBO Advisory Group, Rick enjoys sharing his ideation strength to plan and introduce operational and cost control initiatives, ultimately driving greater social awareness and mission impact. Rick has served as a leader, a mentor, trusted advisor, and proponent of positive and productive organizational change. So Rick will share with you today why principles that support the mindset of cash is king is so important. So Rick, I'll turn it over to you.
Well, thank you very much, Dana, for that very warm introduction. And I'm very happy to be with you all today and to be teaming up with Bank of America and the University of San Diego. I sincerely hope that you are all staying both safe and healthy right now during these trying times. Just as a kind of a housekeeping matter, as we go along today in the conversation, If you have questions, please put those questions in your Q&A section at the bottom of your screen. I just jumped ahead too much here. Rather than the chat section, right? So a lot of times when we're on these Zoom calls, we put information in chat, but today we'd like you to put them in the Q&A. That way we can address those as we go along. Okay, so let's get started. So obviously we all believe that cash is necessary to operating any business or nonprofit. And what I'm going to be highlighting today is equally important for any business or nonprofit. I'm going to attempt to use the term organization to refer to both the for-profit and nonprofit entities. I think we can all agree that all organizations should operate with an eye toward providing a service or product that ultimately helps the community. And being a good steward of an organization's resources will allow it to continue on into the future doing what it was created to do. So today we're going to talk about some proven and innovative ways to ensure that an organization will survive during these uncertain times. Most of which has been taken away from, gosh, my almost 40 years of working with companies with the overarching goal of helping them flourish. I would say we all get the importance of cash and why it is important. What we're going to also talk about is the impact of incremental changes to things like revenue, things like expenses, review some foundational tactics, and then change our thinking to think of cash as really fuel for our economic engine. I'm not sure that I could find many people today that would testify to things being normal, or even fewer that say that anything about life is certain, except maybe death and taxes. We're living in a very uncertain yet historic time. Regardless of the level of uncertainty you find yourself in today, we have good news to share with the hope that this too will pass and that you will get through this time. The topics I'm going to share will give you focus and purpose on financial solutions to help your organization. Whether you represent a for-profit or nonprofit organization, the information is equally valuable. So before we get into some of the solutions, let's review some of the facts about business failures. So according to the Small Business Administration, just with a show of hands, how many of the businesses on the call today are 10 years or older? And just as an aside, we can't see you, but a bunch of you are raising your hands through Zoom. That's great. Congratulations to you businesses that are 10 years or older, because you're part of the success stories. Those that are on their way to 10 years, you're getting there. Great, keep it up. So let's work on different ways that we can continue the success. And we're going to quickly review the reasons and threats to why organizations fail. These are some sobering statistics, yet we need to just be aware of those because that is basically the reality. One of the biggest threats that organizations have is insufficient working capital. In other words, too little cash. Most of your bankers will tell you that you need to have adequate working capital if you're going to have a successful business. Many organizations run on the passion of the founder, which is great, but we need to be careful to include an economically realistic view of the environment in which we're operating. And so this includes understanding each step of our revenue generating process. You know, this is the proverbial goose that lays the golden egg for you. Also, pricing your product or service correctly and not taking too long to make any changes in the pricing. And finally, I often recommend that organizations begin discussions with banks sooner rather than later about securing a line of credit that might be able to be used when uncertainty does strike and your reserves are not yet established. Probably the saddest thing that could happen is when something bad happens and you run out of cash and you don't have a line of credit to draw on, and that's not the time to go get the loan. You need to have those conversations with your bankers in advance. So ways to become aware of where you are related in response to your liquidity would include calculating the number of days of cash you have on hand. That's a very simple calculation, and it gives you a quick view of how many days you can operate should everything stop. Another ratio I like to use is the working capital ratio. And that's something that comes off your balance sheet, which informs you of how much in the form of liquid assets, cash, accounts receivable, inventory, those types of things that you can convert to cash to cover your immediate or current liabilities. Another threat is inadequate boards and management. So please don't think I'm throwing rocks. I'm just the messenger. Unfortunately, this happens more in the nonprofit world where the need for expertise in specific areas is needed. The assets, including cash, of an organization are the purview of the board, and they should require at least monthly updates on all cash positions. Cash is important. Another important business skill often found on well-crafted boards includes marketing, accounting professionals, real estate folks, legal, insurance, and banking. You might say, why do I need real estate people or insurance people on my board? Well, real estate people know a lot of what's going on in your community, and they know a lot of people. Likewise with insurance folks, and forever you'll be dealing with insurance issues, whether it's liability insurance or workers' comp insurance or maybe benefits insurance. These types of people are invaluable when it comes to understanding your business in areas that you might not have a level of expertise on. Thankfully, there's many people in our community that are willing to serve in this capacity on your board. And in some cases, when needed, you can outsource that. Another threat to businesses and their continued success is ineffective business planning. Now, every organization, whether it's a for-profit or a nonprofit, should have a multi-year business plan clearly addressing these 6 areas that are highlighted on the screen. And for those of you new to the idea of a business plan, a SWOT analysis is when an organization honestly reviews its strengths, its weaknesses, its opportunities, and its threats. And another cause of an organization's failing is marketing mishaps. And here we need to make sure that we have adequate capital, again, cash, to fund our marketing plans. Well, what is marketing plans for an organization? Well, do you have a website? What's your website look like? That's a client-facing platform that people see. Is it pleasing? Is it welcoming? Is it easy to navigate? What about your collateral material, materials that you might hand out to clients? Things as simple as your logo says a lot about your organization. And in the worst case scenario, your cousin might be a great artist, but I would just highly recommend not using close family members, unless they're experts, to do things like marketing or creating logos for your business. All in all, it also includes having those realistic budgets. And by all means, outsource this function, right? So we have lots of people, organizations in our community that do this and that would do a great job for you. So let me pause just for a second and see if we might have any questions that have come in along the way.
Hey, Rick. Yes, we actually do have one question. This is about whether the materials you're going over today are going to be emailed to the participants.
Great. Thank you for that question, Dana. And for the person that was brave enough to ask the first question, you get an award, a big gold star. So yes, we're going to make this presentation available, and it will be emailed out to everybody that was registered. I believe the session is also being recorded, and will be available to be watched at a future date.
Great. Thank you, Rick.
Yeah,
and just a reminder for everyone, if you have a question, the Q&A function is working well. So just type in your question, and I'll cue Rick, and we'll get the questions answered for you. That's all we have though right now, Rick.
All right. Thank you, Dana.
Yeah.
Okay, so now that we've reviewed the areas of failure that we all want to avoid and protect against, let's dive into the components of some revenue, expenses, and efficiencies. Okay, so in our economy, obviously, cash has always been a strong determiner of outcomes. And what I mean by that is you need cash in order to operate. You also need cash in order to invest into the future. Each year we hear about businesses that go under because they don't have enough cash, one of the reasons we talked about already. And again, it's not because they lack passion or purpose or even the best location. Most often it's the result of not having enough capital. They're undercapitalized, which is another way of saying they ran out of cash. So let's all agree that the way to survive and thrive and flourish is by having enough cash. Cash is the fuel of your business. It's not so much an operational issue, not so much a finance issue as it is an operational issue. Every step of your business takes cash. And our mindset on how we approach cash is just as important as what we spend it on. We should be tracking cash as closely as we track sales and expenses. Here, we have a list of ideas to consider in maximizing revenue. So I ask you, what impact would it have on your bottom line to increase sales by just 1%? Are you cross-selling to existing customers? Your existing customers don't need to know how great you are. They already buy from you. Are you selling them other services, providing them other products? When was the last time that you reviewed and compared yourself with your competition? Who is your competition? Who's your biggest competitor? What are they doing that you're not? From a nonprofit sector, what are you doing to increase donations? Are you engaging grant writers or going for different streams of revenue? Maybe you're offering some matching donations. These are all questions that should be pricking your brain to see, whoa, what are we doing about that? And so revenue is important, and these are ideas on how to grow and increase your revenue, things that you might not have heard of before. Let's look at some items of expense. So minimizing expenses is a full-time job, and it's made easier with the right mindset. And what do I mean by that? So does your organization have a want or a need mindset in spending money? Having a continual mindset of need to spend over want to spend will help discipline an organization to create and maintain good spending habits. It's not just an open checkbook, friends. As is often the case, labor takes up the lion's share of expenses and can have the largest impact on cash. So what impact would it have on your bottom line if you were to decrease your labor expenses by 1%? And so, Rick, how can I do that? Well, you might look at your overtime. You might take a look at how often overtime is happening and what creates overtime. Overtime is basically an inefficiency. And if you can get by without it, time and a half labor becomes a lot more appreciable. Also, preventing turnover. So with turnover, there are statistics out there that to turn over an employee's position can cost as much as 100 to 200% of that person's annual salary. That's a lot of extra money being spent that isn't necessary. So what do you need to do to prevent turnover? Here, you might need to engage a human resources expert or a professional to talk to you about human relations and what things you can do in it as an organization if you find you have a high turnover rate. Rick, what's a high turnover rate? Well, a lot of times it's dependent upon industry. There are some industries that do have a fairly high turnover rate. I'm thinking of the restaurant service industry, anywhere where there's lower wage jobs and people are just kind of moving from job to job to job. But take a look at what your average turnover rate is, and then look at your industry and just use my friend Google and check him out and say, Google, what's the industry average turnover rate for banking? You'll be amazed at some of the information that comes up. In addition to looking at our turnover, those labor-related expenses, those expenses that are the caboose that come right along with the engine of labor. So benefits, workers' compensation, those things are mandatory in many cases, but it's not mandatory that you spend too much for them. Now is a great time to take a look at reviewing some of those policies. And then lastly, from a cash preservation standpoint, the CARES Act had a provision for a payroll tax deferral. And that allowed employers to not have to pay their portion or the employee's portion of Social Security tax and pay it in 2021 and 2022. So basically whatever they're going to incur in 2020 would be deferred, be like a short-term loan that they'd pay off over 2 years. So those are just a couple of items that we can look at to minimize our expenses and also to preserve our cash. In addition to the labor and those related expenses, there's a couple of additional areas to take a look at. And I talked a little bit about insurance just briefly, but also want to mention rent. So, basically what happened in March with the shutdown of all the businesses is everybody started working from home, or they were out of work in an unfortunate case. But for those that have been working from home, businesses have been seeing that their need for office space has shrunk considerably. There's a very large, well-known organization in San Francisco called Salesforce that does client management software. You might have heard of them. They're not having their employees come back until January. And you can bet that all organizations are looking at this very closely. Do we need this much space? Maybe we can have employees work from home. And if that is the case, you might be looking at a renewal coming up for your current office space. I'm recommending that you go very slow when it comes to rent renewals. According to many of the experts, the real estate experts in San Diego in this area, we're likely to be experiencing a large influx of available space right around the first of the year, after the first of the year. And with a large amount of employees working from home, it makes a lot of sense to look at that and see, can you continue in that model? And so where it makes sense, many organizations are actually planning to decrease the size of their office footprint and let those employees work from home. There's a lot more to consider, right? I mean, we're just talking about some dollars and cents, but go slow, and don't be in a hurry to renew your lease, even if the landlord is promising a lot of information or a lot of concessions. Just be very careful in how you move with that. And then just with respect to insurance briefly, that, the liability, workers' comp, and health benefits, many of the brokerage houses are in renewal process. There's some situations where policies are increasing or decreasing, but it just probably warrants your time and effort to just take that a little bit slow and see if there is something that can be happening for you to decrease the amount of those policy costs. So let me just take another quick pause. Dana, maybe do we have any other questions right now?
We sure do. Okay, so we got 2 questions here. The first one is, when calculating the day's cash on hand, which expenses do you use to determine the daily cash needs? Total expenses of the last 12 months, prior year, or depreciation and amortization expenses excluded?
Okay, great question. So what I would say, definitely, you don't want to include any non-cash expenses. So anything that is depreciation, amortization, you're going to exclude those. And then you want to use as much as possible the most current information. Obviously, if you've got financial statements for, through June, then in your calendar year organization, take the cash balance through June, divide that by 180. That's going to give you your daily cash available. You take those same expenses for the same time period, 180 days, January through June, and divide that by 180 days. That's going to tell you how much cash you're burning a day. Okay, so those 2 things come in handy. Once you know your daily cash burn, divide that into your current cash balance, what you have in the bank as of June 30th. That'll tell you how many days cash on hand.
You got it. All right. The second question we have is there a rule of thumb about what percentage or what percent of budget should be spent on payroll?
It's largely going to be dependent on the industry. I would look at industry guidelines and standards, because an organization that's very labor centric is going to have a higher degree of payroll, and those that are very minimal and using more technology, it's going to be different. So I would recommend going to whatever industry you're in and looking for guidance there.
All right, that's all we have for now.
Okay. All right, thank you. Good questions, keep them coming. Okay, so we've talked about revenue, we've talked about expenses, let's talk about efficiency. So optimizing efficiency can be addressed by reviewing two main areas, policies and processes. They are essential for any organization to function at peak performance. So my question is, what policies are backing up the processes your organization goes through each day? Whether it's policies around internal control, the size of your reserve, how you select vendors, your policies should be well documented and periodically reviewed by the governing body of your organization. The processes or steps your organization goes through in carrying out its business should also be well documented. When you're doing this, be sure that you're also looking at the time that it takes to complete each step in each of the processes. So let me just take another quick pause here because we're going to shift gears. Maybe any other questions that might have come in at this point?
No, not right now.
Okay, all right, thanks. All right, so, when we think about policy, that's the document that says, this is why we do what we do. And processes are, this is how we do what we do. So that's the distinction between the two. And we want to make sure that we have well-documented processes, because if we can understand each step of the way and how much time it takes, we can look for ways to reduce that time and increase our cash in our business. So we're going to shift some gears right now and talk about a concept called cash conversion cycle. This is the new and innovative stuff that I was talking about at the beginning. And the remainder of this presentation is going to focus on increasing your awareness on how much revenue your organization brings in on an average daily basis, and how that informs the time it takes to get that cash into the bank, right? Because revenue and cash are two different things. Revenue is what you're earning, cash is what you're putting in the bank. You can earn a whole bunch of revenue and bill people for it and wait for that to come in through the door in your mail. We want to get that in the door as quickly as possible and in the bank as quickly as possible. So the ideas that I'm going to talk about are from this nifty little book called Cash, The Fuel for Your Economic Engine by Jeffrey Redmon and Adam Siegel. The book is available on Amazon. I think it costs 12 bucks. It's a small little book, but I highly recommend it because it has a wealth of information in it, and it's such a neat little book. It contains some very useful worksheets to really dial in on your efficiency and also your cash awareness for your organization. So this little jewel of a book also has some great concepts and worksheets on increasing your bottom line by moving the needle as little as 1% in the area of revenue and expenses. Just 1%. This little portion in here where it says how 1 + 1 + 1 = 19, that's your tease to buy the book and check that out, because it's amazing. These 1% adjustments create a 19% increase in your bottom line. That's some crazy math, right? Okay. So your cash conversion cycle, the number of days it takes from the day you start spending money to make a sale until you actually receive cash from the sale. And what that looks like for you visual learners out there is a cycle that starts with marketing, and from there moves into sales, then to production if you have things you're building, then to delivery. This could be the actual service rather than production piece of the cycle, delivery of that service, and then billing and payment, collecting on that. So depending on the type of business that you are, you could have 4 or 5 what we'll call sub-cycles of the cash conversion cycle. And it's imperative that you understand the time it takes within each cycle. So this is just going to be going around and around and around, but each one of these we're going to talk about just slightly in detail. But again, the book, much more detail for you. Okay, so to determine those days in your cash cycle, we need to understand how much revenue on average is brought into the organization on a daily basis. Because this is all about daily revenue and how much you're bringing into the organization. So I know this is kind of a new concept. Let me just take a quick pause in case there's a question or two before I move on to show you a schedule.
Not yet.
Okay, let's look at this spreadsheet. This is going to calculate your cash generation by day. All right. So in this example, the organization generates on average $10,000 a day. So they're starting with $3.6 million, dividing it by 4 to get 900,000 per quarter, taking the total again, 3.6 dividing by 12, 300,000. And then on a daily basis, it's 10,000. And obviously the math isn't super critically correct here because we're using some round numbers just to make the discussion go a little easier. Okay, so the way this is set up is when you get the slide deck, you can actually drop your numbers in here and see what your annual days of revenue is in your organization. Okay, so that's one little schedule. Then there's one other schedule, and I promise those are the only two that we're gonna look at. We're not going to get into a bunch of Excel exercises here, but this is one more. So this is actually looking at applying that average daily revenue that's been generated to each of the days in the various cycles. So as you can see in this example, the organization is going to use $820,000 of cash between the day it starts spending money on marketing until it collects its first dollar from sales. Wow, right? So they've determined by looking at their cycles, the marketing cycle from the day they start trying to attract a client until the time they're ready to make a sale is 30 days. And then the sales department, by the time it gets that lead from the marketing department to closing the sale is 10 days. In this case, this is an organization that manufactures goods. So it takes 7 days to get into production, 5 days to make the delivery, and then it takes another 30 days to bill them, collect it, and get the money in the bank. So by taking all these days and adding them up, it's 82 days in the cycle. That times $10,000 is the $820,000. So when you're looking at a business to get started and you find out it takes 82 days to convert to cash from the beginning, and they don't have a balance sheet that shows, or a bank balance that shows $820,000 at least, they're undercapitalized. What do your numbers look like? Again, this spreadsheet you can take and drop in your days and then just do the calculation, and you'll see how much money you need to it needs to operate your business from beginning to putting money in the bank. And so what we're going to talk about is ways that we might be able to shorten this cycle, because if we can shorten this cycle, that number goes down, more money gets into the bank sooner.
Hey, Rick, I've got 2 questions.
Yeah.
All right. Is this
okay?
Okay. All right. So first question is, how does this cash conversion cycle change if it's not manufacturing, right? If you remove the manufacturing production piece of it?
Right. So let me back up 1 slide or 2 slides. 3 slides. Okay. On here, you don't have a production cycle, but say you're just you're an insurance company, or you're just some service company. You have a cycle in here of delivering what you have promised. You've gotten you've started, you wanted to get the client, you got the client, they signed up, they want to have your service, you've been through the sales cycle, now you have to do the work, deliver the product. And the product is your service. So you've got to deliver the policy. You have to, if you're a doctor, you have to see the patient, or the dentist, you have to see you have to do the work. So the production and delivery cycle might be one and the same. And then the billing and payment cycle are going to be the same in any type of organization. You've got a bill, and then you've got to collect. Some organizations will bill in advance, cash on deposit. They obviously have cut down their cash conversion cycle considerably when they can collect in advance, collect a deposit, something like that.
Okay. And our second question is, our organization has extremely quote unquote lumpy revenue because it mostly comes from grants and institutions, not fee for service. Our revenue is somewhat independent of daily operations. Can an organization like ours think about an expense cycle instead?
Well, that's another great question. I think all businesses need to think about their cycles. So in a nonprofit that's getting a majority of its revenue from grants, say, there's a grant cycle. There's time to get the grant in the door. And then there's typically with governments, then you're just going to be paid as long as you submit a request for reimbursement. Many times grants are reimbursement based. So if you delay in your reimbursement request, you delay in the money coming in the door. That might be something to take a look at in an organization that has grants.
All right, very good. Thank you.
All right, great questions. Awesome. Okay, so once you understand the cash conversion cycle and you've kind of narrowed down those different components, the subcycles, you want to really make sure you analyze those well from beginning to end, making sure you understand what's involved with that process. A lot of times people will do a flow chart to show beginning to end of the processes, and then also who is accountable along the way for that process. When we look at analyzing those cycle times, we want to think about ways to improve those. So we got 3 ways we can talk about today. So, in our example of reducing the cycle time by 1 day would bring in $10,000 sooner, and more money in the bank sooner could mean that bills get paid sooner and there's less dependency on credit from the bank, from creditors. Secondly, mistakes take time. And since time is money, they're also negatively impacting your cash conversion cycle. So here, we want to create a work culture that doesn't penalize first-time mistakes. Emphasis on first-time mistakes. We want to encourage resolution of mistakes and the elimination of repeat mistakes. And then the third approach is to look at the ways to improve your business model. This can happen like in a visioning session where people are free to provide ideas for improvement. Many times, the people in the middle of doing the work can be your best resource for reducing cycle time. So let's talk about what it is that we need to know. We need to know what starts the cycle. Identifying and agreeing on what is the beginning event that starts the cycle in that subcycle. And then we need to look at what's slowing down the cycle. What's getting in the way? Are there bottlenecks? Are there too many people touching it? And then also, what could speed up the cycle? If we added one more person to the cycle to do the work, how much of a decrease in days in the cycle would that create? Because remember, in our example, each day we decrease in the cycle, we get $10,000 in the bank sooner. So if we've got to pay an employee their wages for a day, but we get $10,000, I mean, it's kind of a no-brainer. And then how does each subcycle complete and then hand off to the next cycle? Does the cycle complete and then it goes to someone's desk and it sits and sits and sits? Or is it a warm handoff that the other cycle picks it up and runs with it? Those are things to take a look at. Let me just take another pause for any questions that might have come in.
Not yet.
Okay. And this part here is a little bit more gritty. Okay. So now let's review some of the things that we've learned. We've talked about the importance of cash and why it's important. It is the fuel for our economic engine of our business. We've talked about the increment or the impact of incremental changes, just shifting what, asking your question, what would a 1% increase in sales, 1% decrease in expenses, what would that do to your bottom line? What would the incremental change of that be? We've looked at some foundational tactics and this idea of cash conversion cycle and its subcycles, and finally this idea and the concept of cash being fuel for our economic engine. Also, we learned that we don't want to be a statistic. Our businesses are too important. We're employing people, we're doing essential things for our community, and we don't want to be a statistic. We are needed. And in these uncertain times, we need to do all we can to preserve and protect that cash. We talked about, again, I'm going to harp on, looking at the 1%, the one, power of one, increase your revenue by 1%, decrease your expenses by 1%. And then finally, really knowing your cash conversion cycle. And with that, I think I'm at the tail end and ready to hear any other questions that might have come in.
Sure, absolutely. Well, thank you, Rick. One question that's come up is, as it relates to some of the changes that leaders in the organization may need to make, can you expand a little bit on communication and training of the employees and the staff, and how to ensure positive morale, right? Because these can be difficult times, and how to lead the team through change positively.
Right, and another great question, probably worthy of its own webinar. Employee relations, right? Change is often hard. Mark Twain once said that the only person that likes change is a wet baby. And so we have to be careful as we go through change. Your organization is going to help you determine how you do that change, knowing the culture of the organization, how fast you can move. Some organizations are very nimble and quick, and you come up with the idea and boom, it's done by that afternoon. Others, you need to kind of socialize and bring the information out, let people think about it, especially when there's large gaps in technology that are going to be changing. In a hospice that I was the CFO for, this was many years ago, but we were bringing on electronic medical records for our hospice nurses and folks that were in the field. We had been using paper charts up until then. And one of the things that came out in our analysis of this change event was that people didn't even know how to use a computer. So we had to take a couple steps back, provide some training, talk about, getting them used to a computer before we ever told them they were going to be charting in a computer system. So I think your organization is going to help inform you of how you make that change. And it always is beneficial to have multiple advisors. So whether it is a paid consultant or your banker, people that have done change before can kind of highlight some of the pitfalls and things to be aware of and to avoid. But a great question.
Right. Yeah. Thank you. Okay. Another question has to do with board membership. That was one of the first slides, one of the potential derailers. Any thoughts or advice for the audience in terms of if you have a difficult board member or a distraction of some sort that is not going in the same direction as the organization, and how to navigate through that?
Very gingerly. So best way I have found to deal with uncooperative or unruly board members is with another board member. It doesn't really pay to get the CEO involved in that, because many times they'll be on the opposite side of that table. So getting the CEO who recognizes that there is an issue to get consensus and enlist some advice and help from other board members. I would like to think that if there was an individual who was not being very cooperative, that it wouldn't be a shock. It would be known by the rest of the board. And then so if we've got kind of a bad apple, I have seen in nonprofit world where board members have been fired, where you take a volunteer out because they just don't align with the values of the organization. In a for-profit organization, it's a little different, depending upon if these are owners we're talking about. It could be family squabbles that you're dealing with. So it is a fairly complex issue, one that I would recommend, again, advice and help from people that work with boards on a regular basis. We've got some great ones in San Diego.
Yeah. So the next question is around budget, right? So you talked about having a realistic budget. So maybe you could expand on what makes it realistic?
Right. So it's the job of the CEO to define reality. And when a budget's done, it's nothing more than, it's a tool, but it's a projection on what the future might hold. It's very important to make sure that your projections and what you're thinking sales are going to be and expenses are going to be are realistic. And what we use a term in consulting called pressure testing. So once a budget is done, we put it through some rigors to determine, does this make sense before we would release it. So the budget, having a realistic budget is one in which, if your sales for the last 5 years have been increasing by an average of 5%, why are you budgeting for a 10% increase? Help me understand what's going to be different. If you're budgeting for your actual expenses in the last 5 years for payroll have been a certain percentage or have gone up 3 to 5% a year because of salary increases and any kind of benefit increases, things like that. Why are you budgeting for a decrease? What's changing? So all of these kind of anomalies, anything outside of a 5% change should spark a question that the reviewer would say, okay, what's changing? Help me understand why you're making a number that doesn't appear to be in line with what reality has been over the last period of time.
Right. Got it. Okay, our next question is around the cash conversion cycle. So thinking about some of the audience members, not-for-profit, and we heard about grants and maybe government, funds that they've applied for. But what are some words of advice in terms of speeding up that cash cycle if we're dependent on donations and grants during a pandemic when it might be hard to get that to speed up, that cash cycle to speed up? So any advice for the audience on that? Yeah.
Okay. So in a nonprofit world with donations, looking at those cycles of when a gift comes in. So maybe you have a cycle called a sub-cycle called a gift acceptance cycle. When the gift hits the door, how long does it take to get an acknowledgement back out the door so that donor feels appreciated? Also, how long does it take for you to start a campaign? Many nonprofits have fundraising campaigns throughout the year. They've got something starting in say October 1st. They're going to have a campaign to try to prevent wildfires. How long does it take to start that campaign? How long does it take for the campaign to end it and then to collect that money? What kind of steps along the way are we doing to ensure that the cash coming in is being accepted as fast as it can? Are we seeing a bunch of money just hit a post office box and we're taking our time getting it in the bank? I mean, each step along the way, again, this is why policies and then the processes are so important. Why we started with that is understanding what your processes are and how much time it's taking along the way for those would allow and inform, illuminate ways to maybe look at reducing that cycle to convert it to cash.
Okay, very good. All right, we've got one last question. In your mind, who is leading change and how an organization operates, particularly around finance? Is it the board treasurer? Is it the executive director? Or is it the finance committee?
So the main change agent has to be the leader of the company or the organization. So that's going to be the CEO. The CEO he's got the vision, and through help from the board, they've set a vision, they've set a path that they're going to go on. The board's main role in this is to make sure the resources are made available to execute on that vision. So the CEO sets the vision, and then people underneath execute the vision. So on a financial perspective, if the CEO says, you know what, I want to have, right now we have a reserve of 30 days cash on hand. I want, in a year's time, I want 180 days cash on hand, 6 months, a nice reserve. Okay, that's the vision. CFO, controller, you know, make it happen. In Star Trek, they used to say, make it so, number 2. And executing on that vision. So then the head of the finance department then creates or crafts a plan to get there. What does that look like? How do they put that together? And then once they have their plan together and it's reviewed and approved by the CEO, then they have people that they're working with to help them further execute that plan. So it starts at the top.
Very good. To the top, yep. Okay, then the last 2 questions we've got here is, they're more technical, but what's a good number for cash on hand? And then also a good ratio of working capital.
Yeah, so I did mention 180 days cash on hand in my little example there. I say that because that's what I believe is what every organization should strive for. It might interest you to know that 6 months of reserve in San Diego for nonprofits is a bit of an outlier, but nonetheless, it is an important thing to have. There is another nonprofit that you might have heard of and visited quite frequently called the San Diego Airport Authority. And I would venture to say that their days cash on hand is somewhere around 1,000 days cash on hand. And so that's for good purpose. You need to be able to show your constituents why you need to have that. I believe they have done that, but 1,000 days is where they're leaning. So that's a good number to land on. 180 days, 6 months cash on hand. And then on the ratio, you always want to make sure you've got at least enough current assets to cover your current liabilities, at least. Preferably 1.5 to 2 times, okay? Because you just never know when things could go sideways, and you need to have the ability to make sure you're taking care of your expenses. It also, or your liabilities. It also speaks to not becoming overly dependent on creditors.
Good, good. All right, well, that's all we have in terms of questions. So maybe I'll just put one last call out there. If anybody has a question they want to ask, go ahead and put it in the Q&A. But I think we're getting close to the end of our hour together. And Rick, this has been fantastic. You've given us some things to think about. You know, I'm just going to roll through some of the notes that I took here. You shared with us some of the threats that we all need to consider to cash flow, and reminding us why cash is king. You talked about revenue, expenses. You kind of connected the dots for us between policies, right? That's what we do, or what the organization does, and then processes are how we do them. You put a plug for the book called Cash Fuel for Your Economic Engine. So it's out there on Amazon, right? So easy enough to go get and pick up and get more detail. But the big 4 takeaways here: cash is important. And the impact of incremental changes are really powerful too, for us to understand what those 1% impact can be. And then I've got foundational tactics. And then my last thing was CEO and the importance of leadership and the leader driving the change and the accountability. So did I miss anything? Would you put any other plug in, Rick?
No, that was excellent, Dana. And I thank you very much. I would just add that if at all possible, I'd love to connect with the viewers on LinkedIn. There's my LinkedIn information. Happy to be a resource for any questions you might have. Give me a call. No charge. Be happy to answer any questions. And back over to you, Dana.
Great. Thank you. Thank you, Rick, for joining us. So a big thank you on behalf of Bank of America. We appreciate the partnership, Emily, with USD, and thrilled to be here today. It was very informative, and we thank you all for joining, and hope you can join us for future sessions as well. So for that, have a great afternoon. Thank you.